All right. Welcome back again, guys. Thanks for joining us. Please be sure to tell your friends about us. We're trying to grow this as much as, well, maybe we'll just replace CNBC. I mean, their ratings have been kind of coming down. It'd be fun to replace that network. But anyway, we've had kind of a little vacation time, and I took my vacation when Cramer was just getting back, so I missed all of last week. But boy, you've been busy over there. And I know that this week has been just as busy, only now he's saying sell pretty much every oil stock there is, and some other stuff is going on with lithium and banking, so we can tear into that. But you've got a few new ETFs going on too.
Yeah, so last week we launched SCRE, which is 2x inverse regional banks, so 2x inverse CRE. Only inverse regional bank ETF out there.
So,
We got a tweet going on Twitter where I'm saying, the last time when Jimmy told you to buy Silicon Valley Bank, you had no good way to short regional banks, so now you do. He is out there recommending Huntington Bank, and I think he also recommended Key the other day. So,
so
in my mind, when Jim likes the regional banks, you shouldn't.
yeah, absolutely.
Um, yeah, then today, I mean, the oxygen is being sucked out of the room by Bitcoin, but we launched 2x long Apple, 2x long Microsoft, and 2x long Google.
Oh,
And last week we also filed for a 2x long and short spot Bitcoin. And the SEC hasn't told us to withdraw it yet. So we'll
sweet.
see.
They're not slamming any shame foams on you.
Yeah, I mean, they've been busy, but as far as I know, my lawyer hasn't gotten a call today either. So
Perfect. No news is good news. What was the ticker on that first one? SCREE or
no, SKRE.
SKRE? Okay.
Yeah, so
S.
no
Oh, that makes
volume
sense.
yet.
Duh.
Yeah, short CRE.
There it is.
Yeah,
Nice.
no real volume yet, and it's only been out for a couple of days. So, I mean, basically, this is one, and I think there are bombshells hiding on some balance sheets of some of these regionals,
Oh, I'm sure.
and now you've got interest rates creeping back up again, kind of like the tide goes out, you find out who's swimming naked. I think you're going to see some news, and then I think that'll generate some interest for this.
Good point. Yeah, this'll probably do very well. I mean, I know KRE does tend to have some pretty decent volume, so an SKRE would do even better.
Yeah, I mean it's one of those areas that nobody really paid attention to until last year. And now, I mean, I love trading regional banks both sides, and I know a lot of other retail guys do as well. They move.
They're good and volatile, that's for sure. And we live
Yep.
on volatility around here, so very nice. I'll keep an eye on this one. Curious to see how this one turns out. I love leveraged ETFs primarily because I love being an option seller in them.
Yeah,
Um,
we need some volume to get the options in there, but hopefully soon.
and I'm just starting to be able to sell some options in SJIM, which is nice, and that's working out pretty well. Let me switch back to my regular candles and go to a longer time frame. There we go. But I mean, that's been kind of hanging out right in that range around 21, $22, and it's doing good enough to almost start selling some calls and puts for me anyway. But the bid ask is still a little wider than I'd like, but I can work with it. Just let the time decay them up, run them a month out. Um, Wheel trade strategy is kind of one of my go-tos, and I think eventually it's going to provide enough volume to do exactly what I wanted to do. And on other stuff like some of the stuff Jim Cramer mentions in the energy sector, some of them are low dollar enough where you can start wheel trading those too. And I'm starting to notice that there's a little rotation maybe happening in oil, particularly refiners. And then, you'll get the producers and stuff to kind of follow. Um, kind of
It's not a Kramer name, but keep an eye on C as in cat, V as in Victor, E as in Edward. There's been
CVE.
a lot of weird bullish option flow.
Ha.
It seems like every day it comes in, the stock keeps going down. So, highlights a bit the dangers of trading just purely based on option flow,
Right.
because, you don't know the context, and you also don't know if the guy who's buying the options is a moron or not. But
Yeah, I
it
mean,
keeps steadily flowing in.
when you get those unusual option orders that come through, that's something we talk about a lot in the bullish bears. We always say don't go chasing those because there is always going to be a buyer and a seller in that transaction, and I love being an option seller. So sometimes I will find that I can go and follow those as in selling the options because with that big slug of volatility comes implied volatility hikes and you get more premium for your contracts. So that's kind of my
Yeah, I'm in it because I like the oil stocks in general, and I also know that you've got some, M&A activity going on.
absolutely.
So, yeah, I'm in that one. I'm in Chevron, but yeah, and also the fact that Cramer came out last night and said he's not recommending any oil stocks. I mean, if I wasn't so busy this morning, I would have doubled up on all my oil holdings.
One of my go-tos for oh wait, no, not RNG. REI, sorry. Ring Oil. Ring Energy. One of my go-tos for teaching people how to trade the wheel trade is when the volume is high enough on the options, that is, to trade REI. Trading around $1.40, you run like 2 week expiration. This does have weekly options. 2 week to 1 month expiration will net you between 10 and 15 cents a contract, just one strike out of the money, both sides puts and calls. When you're trading something that's trading at $1.40, that income on the options premium will offset the cost of a $1.40 stock very quickly. A couple years back, I did this with it wasn't REI, I can't remember what it was, but same scenario. I was trading around $1. I was able to sell enough options on that to have a negative cost basis inside of 6 weeks. Just swing trading the short legs over and over and over again until I made enough premium to completely erase my risk in the position of the long equity. So one of the things I love to get into on that type of stuff is how to trade price action first and foremost, and then be able to swing trade the short legs and the wheel trade. But to practice it with a penny stock is relatively low risk for a new trader who tends to typically have a small amount to trade with. As life goes on, you start to become a successful trader. You build some portfolio value, some working capital. Then you can start going into stuff where you're looking for yields like TQQQ is a great one to sell options on, for instance, and stuff like that. You build the process, learning it with a penny stock that's relatively low risk, reach that zero cost basis, and then go play with some of the big boys. And that's what I'm looking to with your ETFs is once they start to gain some popularity, gain some volume, and the bid ask on the options starts to tighten up a bit, and you get some options liquidity in there. That's exactly what I would intend to do is to learn, to take positions in there and sell options on them, maybe even use some of them as a test bed to help teach others how to do it. That's my whole goal in life is to show people how to generate income on options. Risk capital is for day trading and learning price action. Investment capital is great for income strategies, and that's kind of the way I like to roll with my portfolio anyway. So it's working good so
And
far. I'm still here.
same, yeah. I mean, same here. I mean, the core of what I do is a zero DTE put strategy that's, purely about generating income.
That's it. And man, it's incredible income when you have that really big spike of implied volatility right on the opening. I know people who will sell like SPX options or even SPY options. I don't particularly do it with SPY because the yield per outlay is kind of lowish. But there's other equities I will, and stuff that's volatile, particularly with zero DTE. I mean, you can really make a quick buck on those. So worst case scenario, you take a position and get a discount on your assignment. I like that too.
Yep.
But at any rate, I tend to lean back on that quite a bit. I love teaching a lot about price action with scalp and SPY options and futures and stuff like that. But my go-to for my investment portfolio strategies is options income. That has been hands down the best thing I could do. Where most people are investing in funds or whatever, and they're trying to kind of at least match the performance of the S&P for percentage in a year. They're sometimes happy with like 6 or 8%, which is like, I almost shake my head and frown at that because I mean I can find stuff where I can yield almost 20% on biweekly options for crying out loud. So
Right. Yeah. No,
you know,
6 to 8% is what, a good half day for you?
yeah, it's a good like 15 minutes in the opening. I mean, that's typical for me with my risk capital anyway. But my options capital, yeah, it's around there per day is pretty good for selling options anyway. And I'm by no means a multimillionaire yet, but I'm pushing that working capital up the hill, and selling premium is my primary function in doing so. Let alone the scalping. I have a goal of scalping about 10 points on ES every day, and I've only recently branched into doing RTY and Q as well. So I'm trading all three of those lately, and been just hand over fist making quick scalps and in and out, make my 10 points in each of them a day. So
Cool.
loving that. But yeah, it's something that's great to do with risk capital and to build, the ability to trade price action, and then you carry that into your long-term investments and start learning how to sell options, and things just go that much better because now you've got price action, you've got the knowledge of being able to sell options to open, and it's just overall in the long run you win win win. So it takes time to learn though. I'm not going to say you're going to do it overnight. So should probably have muted my phone here. Might get Seth MacFarlane come knocking on my door in a minute. Um, Looking at the list of Cramer here, I mean, he pretty much had almost nothing on the buy list. He had HWM, which was an old one, and it was an aerospace company. And realistically, I didn't really see much with it. I don't think you did either, because
No.
nah. But it's been on a nice tear. I wouldn't say buy it now because that looks pretty top heavy to me. Can we say half a kudo when he was talking about that? Maybe because it broke out and went to 55, 75. Okay, half a kudo is warranted, but I would be very careful here because if it doesn't break this level, it's going to come slamming right back down to 52 pretty quick. So definitely not on my list to buy. And
No, not on mine either.
you can see the 2 hour already broke over right here, so it's already given half of the previous leg back. So, I would definitely not follow Jimbo into that trade if I were you, and I won't do it if I were me either. The rest of the stuff was on the sell list, and that's where we got into a little lithium stuff. I think he talked about LAAC. I think first was on his list from the.
Last night was LAAC. I mean, Albemarle is one he gets asked about a lot. And, he keeps saying, hey, Elon Musk doesn't like the lithium companies, so I don't like the lithium companies.
Of course.
I actually do kind of like the lithium companies down here. I was going to buy personally. Where's Albemarle? Oh, there it is. Yeah, I was going to buy it personally yesterday if we weren't staring at CPI today.
Right.
That's probably
CPI gave us some
probably a
opportunity.
good thing I didn't buy it yesterday, but
CPI kind of gave us some opportunity to buy some stuff today in the dip, but take that with a little bit of caution because I think this is going to be a little bit of a pivotal point in the market. And I'll show you SPY before we head out, but
I mean, I do plan on. I mean, I came in with a ton of cash. I do plan on adding equity exposure, but not until the end of the day. I mean, this is,
yeah, let the
I mean, who knows what happens, but
let the
you could definitely see another leg down here today.
let the chop play out till it picks a direction. That's the best strategy. Couple just basic key levels in this LAAC. I mean, I wouldn't say it's a solid buy right here, but we got a nice daily candle starting to emerge here. If that gives us the hammer off that pivot, I think we could go long and maybe retrace about half of this trend here. Maybe say a target of about $6 from here. Pretty reasonable. I always just kind of throw a pivot line in there around the middle of the previous accumulation. Pretty obvious. You got your measured move here. There's your primary, secondary wick exactly to target. Wait for the rebound. And typically, when you have a big move like that, it's very, very common for a trend to revert half. I'll do that candle for candle on a 1-minute chart with my scalping, but you look at longer terms, it's all the same. Typically, you get about half of the trend back, at least for a short-term target. Can this thing continue longer afterwards? Hard to say. But he had another one he talked about with a little more history behind it in the same price range. I thought he mentioned LAC as well, but I could be wrong.
No, but he probably has. I don't. That's one I don't remember. I know Albemarle gets asked a lot.
Yeah.
I'm sure at some point he's mentioned LAC too.
And they're both basically the same company. This one's only beginning to bounce, so it's a little bit behind LAAC, and same kind of thing. I mean, there's no pivot levels known down here where it's at. It's at its looking like its 52-week low, and all-time low. But it's got some rebound to it if it gives at least half of this big old bar back. You got an end of the day target around 560 for a quick dead cat, maybe. It's kind of losing momentum here at about 545, which is about half that expected move. So, yeah, I mean, if this turns out to be a nice reversal, cool, we can get about half that back for the day. Definitely a day trader versus LAAC being more of a swing trader. But I mean, I almost give him a half a kudo, but I almost like to think also that he probably caused most of this by talking about it, because penny stocks, they're easy to manipulate, so to speak. Not saying he manipulated, but you know what I mean. The fact that he said anything brings volume to it, and that's where the move just kind of follows through. It's pretty predictable. No one's trying to manipulate it, but you can definitely tell it's easy scalping. So this is going to be a day trader for sure. I love these. I might even get in that later. But long story short, anytime Jim talks about it, we always take a second look. And hell, any analyst gives a price target change or upgrade or downgrade. I'm always looking at them. So, I follow that kind of thing, and usually I can pick out some pretty clean price targets, setups, and stuff I like to trade eventually. Another thing he was talking about, also the energy. Let's see, GRFS was one that he mentioned quite a bit.
Yeah, Devon and Apache were the two big ones he mentioned last night. He's never like Devon. I can't remember him being asked about Apache before, but
he was saying he didn't like this, and certainly that drop probably kicked him out. I'm willing to bet he might have top ticked this himself. It's just saying. But yeah, okay, half a kudo, because yes, it did definitely plummet, past couple of days here, and it's pretty much done the predictable thing. You get a big move like this, it gave half back. Now it's coming back down to settle. Maybe we'll get a reversal out of this down here. It's hard to say. I'm looking at a potential for some rotation in some of these oil stocks, but this one in particular kind of looks to me like I'm going to wait probably a little while longer and see if we can hold this trend line here and kind of keep putting in higher lows. That is one big range bar. At least, at the very least, you could trade the range of that bar later on, maybe next week or something like that. But, as far as today goes, it's a day trade. It's pretty much done with its expected moves. Came down, gave half back. That's done. So, certainly sit on your hands with this one if you're going to take a position in it. But I certainly wouldn't short it here. It's already done its thing. So, if Cramer's saying get out of this or stay out of this or don't buy it, I'll wait a week and maybe I'll find a buy it signal somewhere. But until then, yeah, I'm not touching it. Moving on, he had APA he was mentioning too.
Yep.
APA. And that's been kind of not my favorite type of chart to trade realistically on the daily. But the weekly does show some interesting effect here. We got a really massive flag here. I always apply that 60-40 rule to a bull flag, and that's kind of what people call these things. I just call them accumulation until it breaks. And eventually this thing will. Can it take another swing to the upside? Maybe. It looks like maybe if some liquidity is being grabbed here, it's right at support. Okay, maybe it can reverse. Rotation in the sector, not quite what I'm seeing here, but this accumulation range may give you one more wave, or it can give you a trend. So looking at the daily, we get both. We got a primary move here. We can certainly see that. We can pick off a secondary move. It's already almost halfway done with that. If it finds support around 30.80, maybe we can catch a bounce back to the mean. But in the meantime, I'm going to kind of keep an eye on this one, but I'm not necessarily going to trade it just yet. This trend is still pretty much underway. So, and I apologize if I'm sniffling. I've got a head cold and it's driving me nuts. So
That's all right.
if I mute my mic for a moment to hack a lung up on camera,
Maybe I should be wearing a mask.
maybe, or at least a splash shield or a poncho, like you're going to an old Gallagher show. I miss that guy. PESTG was another one he was saying kind of get rid of here. That's in a different sector though. Pure storage.
Yeah.
I mean, maybe it's a bit of a top tick. Okay, cool. We can maybe take a short here, but that's not a chart that really appeals to me to take any position on. It's kind
No,
of
the storage companies were all ramping when Powell pivoted, and everyone was jumping in, the thinking being that interest rates come down, mortgage rates come down, people start selling houses, moving, and need to put stuff in storage.
right.
And now they've come back in a bit, but yeah, this doesn't that doesn't look like a chart I'd go anywhere near one way or the other.
No, it's definitely hard to trade for sure. I mean, this thing is just all over the damn place. But it is setting up something I recognize right away. That's that diamond pattern, and we're in the compression side of it. We will eventually have a decent tradable move set up on this thing. But until this thing finishes, I'm going to probably wait. Probably end of the month, maybe early February, we'll get some good legs out of this thing. But other than that, yeah, I'm not messing with that. That's a day trader for sure. It's very volatile, but it moves. I might day trade a little.
Mhm.
Whenever I draw these diamonds, I always come down to the 2-hour chart, and I'm noticing it's right in the middle of this channel. And typically, you get a quick measured move for a good scalp about it. So,
Yeah, I'm not sure how good the option chains are in some of these storage companies. I was looking at something when they were ramping on lower interest rates, and I didn't like the chain, so I didn't do it.
yeah, it's just the volatility is kind of drying up on the option side. So this will be mostly an equity day trading type of thing. It's reasonable. It's got enough price movement, but not something I'd like to swing trade for long term. That's for sure. Would I go short here? Maybe you can get it down to like 35.90 or so from here, but just be a little cautious on this thing. It's too damn twitchy. I don't really like the lack of smoothness to the price action on this thing for day trading or even swing trading. The other one he mentioned, Devon Energy. That's the other one.
Yeah, that was the other big oil. He's never liked Devon. I mean, he hasn't liked Devon in a while.
Again, I'm looking at the same wedge that I saw on the other one. Big old flag. It's kind of hanging
Yeah,
out.
Devon and Apache are probably, my guess would be, they're pretty well correlated.
Yeah, they're pretty much the same chart, really. So can it hold that angular support down here? Maybe. Still trending a bit, but we've more or less made a nice primary, and we're just about back to about half this move here. So I'm not quite long on it yet, but I'm watching that sector for rotation because I really love being able to provide some platforms to learn how to wheel trade on, and that's one sector I watch with some of these lower cost energy companies. Would I go into refiners? Maybe I'd look at like ConocoPhillips probably, and you can see that chart's damn near identical too. I would say maybe give this a little while before we find full rotation, whether it's going to continue in this previous trend or not. But that's a tough call, man. Can I say, sell energy or stay out energy? I wouldn't follow Cramer into that. Maybe half a kudo for a day, but I would not like to short it here. So if he's saying sell energy, I'm gonna take a little more notice to it. But I think we probably are looking at a good potential rotation here sooner or later, and eventually these things kind of tend to break. But here's yet another diamond on this one too, by the way. Definitely gonna be interesting in the next few weeks, and I think probably in the end of the first quarter when we start seeing Q4 earnings coming out and things are starting to pivot, we might see some rotation in energy as well. I know last week and the week before we were looking at gas futures, were natural gas futures were kind of moving pretty good, but then they sort of hit the wall right back at previous resistance here from this channel here, which was support for a while.
Yeah, UNG is the Widowmaker trade.
Yep.
I've stayed away from that one for a while.
And it's a good idea too, but sometimes it hits these lows, and I just look at that options chain and I go, man, I could make some money on that, but I know it's a Widowmaker.
It moved.
And
the other Widowmaker, which is actually one that Cramer likes, is Abercrombie and Fitch. That's the new one. The short side of Abercrombie and Fitch.
Nice. And I'll get into that in a moment. A couple years back, I was trading this trend in this thing, and I took profit just perfectly and watched it take a massive dive. And then I wish I would have shorted the second leg of this measured move. I talked about that before, but it accumulated for a while, and I was watching. I was like, well, maybe if it holds this range, we can get another bull, or at least a return to mean out of this thing. 18, 19 bucks is a little lofty for where it's at right now, but it's hard to say. It is a Widowmaker, and it definitely moves, but yeah, you can really eat your lunch on this thing or have it eaten for you if you're not careful. I was almost considering selling some options last week on this thing, selling some puts around $5 strike and trying to get long on it, but I missed the boat on that one, and I'm okay with that because it's not the most interesting stock to trade just yet. Another one I like to look into is a little bit of coal. And BTU, Peabody Energy.
Yeah, BTU is is my favorite coal one, and the options are pretty decent on that one.
Heck yeah, my famous trade on this one was I was wheeling it here, around $4.60 I think was my entry, and I was just selling calls and puts this whole thing, and then I got a sign on my calls, and then a sign on a put, took another long leg and closed the position and missed the other half of the move, but still I had a zero cost before it got to $7, so I'm not complaining. Now it's kind of setting up the same rotation. I mean, you look at I got my old notes on here even. Wow. I look at this big old flag here. It's consolidating, and eventually it's going to give us some rotation and give us a direction of trend, whether it's down to revert this whole low or continuing higher. And as inflation's been kind of with us on the value of the dollar, that energy tends to go up. So yeah, I'm kind of not too excited yet, but I'm getting to the point where I'm going to start looking at the looking at the sector a little bit more closely and kind of monitoring where that goes, because we could see some decent rotation. And in metals, they've been moving quite a bit too. So usually metals tend to kind of lead the pack with energy, and then eventually energy follows through. So it takes energy.
Yeah, no, I'm a big proponent of anything on the commodity side right now. It has not played out.
Yeah, basic materials, it's starting to shake up a little bit, and
yeah, I mean, so I've been buying, the steels, I've been buying Alcoa, been buying the oil stocks, the precious metals, in and out of the fertilizers a little bit. Missed the uranium trade the other day, which sort of pisses me off.
Yeah,
but
agreed.
I think the smart money, just like they came in totally offsides last year, came in offsides this year, and one of the areas was commodity names. Again, hasn't really played out, but we haven't, nothing's really played out yet anyway, except for that one big update we had.
Right. I mean, we've had kind of like you said, there's offsides entries on these things, and it's kind of making the market a little kooky. And when you get kooky, you get some people doing some weird stuff. There was this video I watched the other day. This guy went and kind of looked into how much hail damage was happening percentage wise versus the insurance companies that have to cover them and that whole thing, and then the builders that would go and do roofing. So, I mean, you got people looking at those sectors and making good trades on it, not using any price action or any rhyme or reason to it, just trading on the news. That's something I almost never do. I'm a technical trader to the core, But every once in a while, you get news that falls in the right place, aligns with your price action. You can make some even better trades. But it's kind of a lot of the smart money is making some strange maneuvers in the market here. It's kind of shaking things up a little bit. So I think probably going to have a rocky, choppy first quarter, and then once we start seeing those Q4 earnings come out, it's going to take a shape and direction pretty quick, and that's why I'm starting to watch things now for rotation. And
and remember, it's going to be about the Fed. You just had Meister came out today and said March is too early for a cut.
yeah, and it's also looking like today we're looking at CPI data coming in, and we went right to angular resistance. I love these diamond patterns, man. I started noticing this yesterday. We had this broadening pattern, so I marked it out, and then I marked the compression side, and sure enough, we hit the regression line of that bear channel in the middle of the diamond. But we've got a long ways to go to get through this month before we actually see some direction from this. And
well, we also have a long way to go to get to the Fed's inflation target. One of the
right,
key question marks now, because we have seen inflation come down a bit, but is that the low-hanging fruit? And are we in kind of that last mile where everything gets a whole lot harder? And right now I'm in that camp. I think further declines in the pace of inflation are going to be harder to come by, but we'll see.
yeah, it eventually shakes out, and it seems like almost everything that makes sense to the Fed to do makes no sense to us. It's like the more they intervene, the more they screw it up. I don't know. There's the old adage is there's three ways to do things: the right way, the wrong way, and the government way. And well, we know how that works. And the Fed isn't even a branch of the government per se, so. But yeah, I haven't been ignoring this massive range expansion followed by contraction here, and it's at the top of a massive bull trend. So most people see these as reversals. They'll see it as a triple top, or I see it as a diamond pattern. Eventually, when they work their way to the end, they do break out. They don't always reverse, though. Sometimes it's a continuation pattern, and you end up in the bullish trend. So watch for, about the end of the month here, we're going to start to see some major sectors start to rotate, like we've been saying. And watching SPY is going to be a pretty good canary in a coal mine for picking off the right time to get into a swing. So certainly pay attention to this pattern here. Draw it on your own chart because it's going to make sense later. And what they give you is when it does break out, you get a bull channel and you get price targets at each of these lines. You can even split them if you want, go half and whole, whatever. But these patterns usually give you all the price targets ahead of time, and all you do is trade from one to the other. So it's just like pivot trading, but at an angle. Well, anyway, that's kind of we've had a little Cramer activity this week and last week, but overall, we're still kind of waiting for a lot of rotation before we can really take some decent trades in the market, and things are starting to finish setting up, but they're not quite there yet. So we'll take some directions.
Yeah,
later.
I mean, the other thing he's been hammering this week, he was out at the JP Morgan Healthcare Conference, is the drug stocks.
Yeah.
And, you also, you always sort of wonder, the drug stocks are pretty big network TV advertisers. And
Yeah.
he seems to like them.
Funny how that happens, right?
I don't know.
And while he's liking them, we talked about PFE before, Pfizer. It made its beautiful one-for-one measured move, and look, it's heading right back for the mean. Right when Cramer says, "Hey, I like them," hell, the 2-hour measured move was perfect today. So I'm looking for an extension target on this thing to about $28 to go short and stay short. I'm currently swinging short from this point, but I don't know, man. Every time that guy talks about something that's sponsoring the big networks, we know how that goes. It's not manipulation. It's just doing what the sponsors tell you, I guess. I don't know. Can't say anything.
They do pay you salary, so
yeah, that's true. So yeah, I mean, like any other entertainer out there, they get paid by these sponsors, and they're a big sponsor, so pretty easy to make trades on that and scrutinize it. I almost wonder if we're going to see an upgrade probably in the middle of next week on Pfizer again. that wouldn't surprise me one bit. I bet you JP Morgan does it. Let's just see if it happens.
Yep.
But in the meantime, yeah, we're pretty much on it for all of our trades. Whoops, I dragged my box there. There we go. Gotta keep that there. Anyway, the other ETFs you're kicking off, man, you're getting busy with that stuff, and I can't wait to see the Bitcoin thing go through, because I mean that's going to provide some serious liquidity. There's a whole lot of interest in that, and I think pretty much any ETF that involves with any kind of cryptocurrency is going to be a hot trade. You think?
I hope so. I mean, I think there'll definitely be an interest from the retail guys in the 2X.
Definitely.
So, got my fingers crossed.
So option sellers unite when that comes, man. It's going to be glorious options income. So I
Yep.
like the idea. Yeah. I think we're pretty much just kind of hanging in limbo. We got a few trades on. There's a few positions to trade, but as far as following Cramer, definitely don't. Not this time of year. You're gonna get hosed.
Yep.
Especially with some of the calls you made on the sell list there. I was just like, really? Man. But half a kudo be granted. Okay, you got a couple of them right. Sure. But in the meantime, if the guy's out there hyping up the pharmaceutical companies and you see a chart like this, you can't deny that. Come on. Anyway, thanks for tuning in. Tell your friends, click the like and subscribe. I'm going to post this up. I tried for 2 o'clock in the day because it seems to have a little more traffic that way. And then certainly, this will be shared among many networks and we'll get it out there. But eventually, if we get the chance to replace CNBC, we've done our job. Thanks again, guys. Have a great week.